Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Wednesday, March the 19th, 2008. The headlines out of Switzerland this morning read, dollar posted gains after Fed cut benchmark rates by a less than expected 75 basis points to 2.25%. The dollar posted its largest single-day gains against the yen in 9 years on Tuesday, and rallied against the euro after the Federal Reserve cut the benchmark U.S. interest rates by a less than expected 75 basis points to 2.25%. Some investors had been betting the U.S. Central Bank would cut by as much as 100 basis points. Lower rates typically reduce the attractiveness of a dollar-denominated security. Analysts are saying that while the cut was smaller than expected, there may likely be more to come. The dollar yen was up 2.75% on the day at 99.86, under the 100 level breached last week. It was the largest one-day percentage advance since February of 1999. The dollar Swissy also managed to break back above parity at 1.0052. That was the high before it turned back to 99.90. The euro dollar was down at 156.54, the largest one-day percentage loss for the euro in 6 weeks. Monday's record peak for the euro dollar was 159.04. The Fed's action takes the federal funds rate down to 2.25%, the lowest since February 2005, and comes 2 days after the central bank announced the latest in a series of emergency measures to stem a fast-spreading global financial crisis. The Fed has now cut rates a full 3% since September. The Fed said in the statement accompanying the rate cut decision that recent information indicates that the outlook for economic activity has weakened further, while inflation has been elevated and some indicators of inflation expectations have risen. The dollar foreign exchange dealers also were reacting to the strength of the U.S. equity markets, which were strong throughout the day and surged to new highs after the Fed action. The Dow Jones Industrial Average gained 3.61% at 12,392. The dollar pushed off some of its recent credit-related concerns on stronger-than-expected results from Goldman Sachs and Lehman Brothers early in the session. The European Central Bank officials have recently expressed concerns about excessive moves in the currencies, but analysts are saying the ECB may be willing to accept the strong euro to help control inflation. An ECB board member told a Brazilian newspaper that the ECB's main task is to keep prices stable and avoid second-round inflation effects, also adding that exports have held up well in recent years despite the rise in the euro. The U.S. dollar was stronger in the Asian session as the markets pondered the less-than-expected 75 basis points Fed cut. The euro dollar slipped abruptly at the open, dropping to 156.14 from 157.15, while the dollar yen moved briefly above the 100 mark before sliding back to 98.82. U.S. equities then rallied back to post an impressive 420-point gain, and the Asian markets followed. The combination of the Fed's cut, along with the two major investment banks, GS and Lehman, posting better-than-expected earnings, inspired the relief rally and allowed risk aversion to ease. The Aussie and the Kiwi were the two riskier currencies which were boosted by this. Overall, the smaller-than-expected Fed move proved positive for the U.S. dollar, as it helped support the growing argument that the Fed's efforts in the introduction of the Term Securities Lending Facility last week and a new facility for primary dealers on Sunday could prove some short-term relief to the financial markets and risk-aversion trades. However, this is a fragile environment, since we believe the worst is not over. In Asia, there are rumors suggesting that additional troubles within some financial institutions have lowered market optimism. In Japan, the opposition party has rejected Tsunami as the government's second candidate for the role of BOJ governor. This is certainly not a good time to be without a captain at the helm. With an appreciating yen, and financial market uncertainty. This lack of a clear BOJ chairman will restrict Japan's monetary options as well as its ability to cooperate with international monetary authorities. In China, the PBOC hiked commercial banks' required reserves by 50 basis points to 15.5%. This was the second time this year that the bank tightened monetary policy to fight soaring inflation. Markets will be watching the Eurozone trade balance as speculation around slowing global demand and strong euro should be taking its toll. However, there is expected a rebound from December's sharp drop, led by a strong pickup in exports. Positive data should be euro supportive. In the UK, the minutes of the March MPC meeting will be released today and should talk of interest rates, since the current emphasis remains inflation. This concludes our news for today. We hope it has been beneficial to you in your trading. We would like to remind you that there will be no news on Friday. It is Good Friday, the beginning of the Easter holiday weekend, and our Forex news calendar has it marked as a market holiday. We will be here tomorrow and hope you'll be able to join us again for the Forex Market News broadcast. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you can find information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. And we also have a link to our Yahoo forum, which is also called Succeed in Forex. Have a great trading day and happy pipping.